All right, let's talk about AMC. Remember that movie theater that was heavily shorted along with GameStop and had lots of trendiness behind it, lots of viewership, and basically the media outlook on it, labeling it as one of the top meme stocks. Now, everybody's been focused on a short squeeze potential, but here we are 2 years later in 2023. AMC just recently went through a 1 through 10 reverse stock split. This means if you had 10 shares, now you got 1. What's going on with its balance sheet, and especially with the debt that it does have, what does this mean possibly for the future of bankruptcy within AMC? Now, we're going to be talking about all these things, and of course, if you're new to the channel, hit that like button, subscribe for daily videos, and thank you so much for supporting a small content creator. I, myself, am not a financial advisor. I'm a guy on YouTube doing research, compiling it, and sharing it with you, trying to learn all together. So make sure you make your own investment decision before making an investment decision. Now, pop it up on the screen right here. AMC currently sits at $13.10. Now, if you think before the reverse stock split, you see that right here, basically on August 24th, before the reverse stock split, you had AMC that was sitting at basically about $1.98. So theoretically, before the dilution of these shares and the conversion of the APE shares, you got AMC sitting basically at $1.30 right now. And why this dilution really came into effect, we're going to be talking about this, and especially what could be the future for AMC. Now, right now, sitting at and increasing the share price for AMC, market cap right now sits at $2 billion. We're going to be talking about why did AMC make this decision and what could be in its future. Now, if we pull it up on the screen right here, especially if you guys don't remember this, like I said, a few weeks ago, they had that 1 to 10 reverse stock split. What happened immediately is that AMC shares actually went down about 25% midway through the trading day, with volume at 5 times their normal levels. Now, what we have seen, especially when previous companies have undergone these reverse stock split type of transactions and can proceed with them, we see more speculative riskiness that's happening behind within the company. And talking about that specifically, AMC right now is kind of in a delicate liquidity situation with a cash balance of $450 million and a debt that exceeds $4.7 billion. Now, a total of $3.1 billion of the debt, this matures in 2026. Now, especially with AMC, they did agree, shareholders did not like this right off the bat. And what shareholders agreed? They agreed with shareholders to pay 1 share for every 7.5 at the last trading, or owned at the last trading session at August 24th. What this resulted in was 59 million pre-conversion AMC shares. So now where AMC does sit is basically at a dilution of 550 million different shares. Now, at 550 million different shares now that are now diluted within the actual outstanding or shares in the float without shareholder approval, this can bring cash infusion to AMC. So AMC did have to make this hard, difficult decision to basically take shareholders and say, sorry, we know you're probably not going to like this, especially, but we need to try to raise cash to prevent bankruptcy in general. Now, especially with the amount of debt that they do have, that $3.1 billion that does mature in 2026, this question is, will this be enough cash flow or liquidity that can raise their cash balance in order to actually save themselves from bankruptcy? Now, talking about that, the question is, did they make the right choice? And I don't think anybody has the true answer for that, as they were literally kind of in a bind, having to make a decision. But we do know that the CEO of AMC has actually been very active and with AMC shareholder base through his social network accounts. And it's great that he's actually encouraged the shareholders to participate in earnings calls, to participate in the media, learn about what's going on within the company. However, raising more of that cash flow to try to save AMC by converting the APEs into the actual common shares probably was not an ideal situation for many shareholders because of the negative impact that we have seen on AMC's share price. So with that and the balance sheet challenges, the companies it was basically forced into a bind. Now the question is, what are some other catalysts that could possibly help or save AMC? That could come with some of the movies that are going to be coming in to try to bring revenue. We saw that the Swift movie that'll basically be coming out in October basically shattered records for ticket sales. Great to see there, and especially with some big movies in 2023, trying to bring revenue or just anything that can literally help this company, I think is great. So where AMC sits right now, I think is not in a happy place for shareholders, and especially where it does find itself with this 1-to-10 reverse stock split. Hopefully it does help raise more of that cash liquidity to help pay off some of its debts, or we could see lots of people start to short the stock again. So we'll be keeping an eye on it. Thank you guys so much for watching. I'll catch you guys later, and peace out. Take care.